talking about what market makers should do, and how will they be able to, get into what the NSE wants to do, especially the banks, like I was trying to say earlier on. How will they provide the liquidity, going by the fact that there's even illiquidity in the banking system?
Yeah, no. The banks are going to participate as lenders. I think that's the first thing we must be clear about. A lot of them still have their, investment banking subsidiaries, except that you have to now make it a holding company structure, such that you don't mix the funds and the activities are not interwoven like we used to see those days, so that you can isolate the risks and protect investors on the commercial banking side. I think that will help. Let us accept that the banks will participate as lenders. I think that's the first step. The second step is, it is desirable to have market makers. It is also important to continue to deepen reforms in the economy, because if market makers come into a market that is still structurally defective as we have, then their market making capabilities is substantially limited. You still have a market that is so bearish, and a lot of investors are staying away from the market. People don't want to go into equities. It's a big problem.
Yeah, you mentioned the issue of bond market makers in the bond market.
Yeah,
how can you tie that to the equities market?
No, I just wanted to use that to illustrate a point. You see, market makers were appointed for the bond market, and they were doing very well. But by the time the market became very overheated, you know what happened? They were supposed to be giving two-way quotes, in which case, you pick your phone, you call the market maker, and it gives you a two-way quote, the bid and the offer price. You will not know whether you are buying or you're selling. But as long as it gives you the quote, you will just, make your bid, whether you're buying or selling. And it got to a point where market makers stopped picking their calls.
Why?
Because they don't want to make markets. What they didn't want then was that the market was bad, the securities were not okay anymore, based on the yield profile that they were displaying. And you don't want to give quotes, and then the market bombards you with a lot of stocks, and then you are carrying a lot of stuff that is not going to put you in a position to make money. So there was a fundamental breach of the agreement with the regulators then, that they will make markets, and markets will continue to be there. Anytime they call, you must pick your phone. That is the market discipline. But the market collapsed. Market makers disappeared. They were not picking their calls. Even when they picked their calls, they were not giving quotes. And at that point, I'm worried, because there was no sanction that was applied to my knowledge, and then life goes on.
Are we going to see a replay of that at the equities market, where market makers may not be picking their calls? Because based on what we get and the information we get, that the guidelines actually provided for market making states that the market makers would appoint a primary, two supplementary market makers for security, and that the first will be expected to provide a two-way quote for 90% of the time in a trading, while the supplementary market maker will be required to provide quotes for 60% of the time in a trading, respectively.
So, where is the sanctions code for those who do not comply?
Maybe that will have to go with the corporate governance. Maybe
it has to.
The code of corporate governance of the exchange and the SEC, because SEC also
will be involved.
Yes, in this. And so I want to believe that a lot of measures will be taken to safeguard the market. And
I think we have to learn a lot of lessons from the bond market. What had happened in the bond market, and I think it will guide the stock exchange and the Securities and Exchange Commission on this drive that they are pursuing now. The little difference here is that for the equities market, because it is an exchange traded market, it is easy for people to just log on their quotes on the system, and people can see it and make a determination whether they want to buy or sell. Maybe the bond market, they were able to get away with it because it is still based on the over-the-counter market, where you make phone calls and all that. At the stock exchange, you don't make phone calls. The prices are displayed, everybody can see it all over the world, and then you can make.
You only work through your dealer.
You only work through your dealer. But we should be very, mindful of that, to make sure that we don't create market makers who cannot make markets.
And that leads us to the point of the risk profile of the market maker. The NSE says that it may consider the minimum capital base of each market maker based on its risk profile. That means there's some market makers that the NSE will say, no, you can't operate with 500 million naira. You have to work with 2 billion naira, for instance. That disparity may be expected.
No, you have to index it. Index it because each time they take on stocks, they are exposing their balance sheet and their capital to risk. And when market depreciates, you mark to market every day. That's the essence of securities trading. And when you mark to market every day, that means you absorb the losses every day. And if you are a big player, that might wipe up this your 500 million naira in no time. Maybe there will be a call mechanism where they will say, as it is now, it's either you stop making markets and buying more, or you increase your share capital so that you still have the minimum that should cushion whatever effects that may come from the market.
All right, still a lot to talk about. Maybe when we get the final approval or the pronouncement to be made by the NSE as regards the operation of market makers in the market. But let's still touch on other issues before I let you go, Wale. The issue of new products for the market. The ETF, the Exchange Traded Fund, is expected to be launched this November by the NSE authority. As regards, according to the sources, they say that APSA-backed gold ETF. This new product we're seeing that the Chief Executive Officer, time and time again, Oscar Onyeme, has said that in the next 5 years there will be a number of products launched. Are all of this going to help boost the market depth, competitiveness, confidence, come back by those who have left and all that? Are we going to see that happening based on this new product?
Exchange traded index is to benchmark. It's not really going to make people come to the market. What will make people to come back to the market, particularly the institutional investors as well as the retail investors, is the platform under which they can come. For retail investors, we had always said, let us promote more of these collective investment schemes so that they are not exposed to direct risks and they can take advantage
like
of
mutual funds.
Mutual funds, they have the capability to provide their research and also their risk management profile to protect retail investors. So that is what the stock exchange should be promoting. People are not so much worried about going into the market. What they are worried about is coming back from the market with losses.
And not getting burned.
So I think we should be focusing on that. Exchange Traded Fund is not going to resolve that problem. What is going to resolve that problem are those mechanisms that protect people from going directly into the stock, which is derivatives. They must be able to have people who can write derivatives.
It's part of what we introduce options later.
Options, futures, and others, so that people can buy and speculate on price movement as opposed to going directly into the price. So that if the price goes down, you've not lost anything.
I think the NSA have all of this in its kitty, and with time it will introduce.
It should be fast-tracked.
Fast-tracked quickly.
Yes.
Let's have it done quickly. All right. Let's look at the issue of listing of some firms that, as regarded as having to make a lot of profit from Nigeria and not listed on our bourse, and a lot of cries as to why are they not listed. What's your take on that? Some telecoms firms, some oil and gas firms, a lot of cries, some calls from analysts, and even market players, financial analysts, financial market players, that these firms should be listed on the market.
I think it's not limited to financial analysts and market players. In the last 1 week, I've seen the legislators, both in the Senate and the House of Reps. They are already preparing a bill that will compel companies in telecoms and other sectors to come to the market by way of listing. And Malam Sanusi, who is the CBN governor, has also joined that crusade. But I think it's an escapist strategy.
Escapist?
And it is this style of Nigeria wanting to have a shortcut to everything and just not wanting to work hard or wait until there's a proper structure on it. A man has set up a company. He has a fundamental right to private property. You cannot compel him to go and list. It is offensive to the Constitution. It is offensive to the right of the company. And it doesn't project Nigeria as a country that is protective of investor and is investor-friendly environment. I don't support it. I think it's a misdirected action. And I think somebody should put a stop to it as quickly as possible.
Okay,
Let us make our market robust and attractive so that these guys can come and list voluntarily. You cannot legislate marriage. You can't force people and say, I've passed the law, you must do this. No,
all right, thank you. Thank you, Wale. We have to put a stop to this interview. Thank you so much for your time. Wale, Oluwo, the Chief Executive Officer, Investment Banking at VGL Group, talking to us about the state of the market, of the local bourse, issues about listing of new products, issues about market makers, and the decision of the Nigerian Stock Exchange to make available market makers and the required capital of 500 million naira. Okay, that's where we wrap up today's edition of the program. But just before we go, just to remind you that you can send your comments, your questions to businessmorning@channelstv.com. businessmorning@channelstv.com. You can send your questions, comments, suggestions, information, whatever that you have that will be of benefit to this program. You will be glad to receive them. From every one of us here, have a wonderful day. I'm Bolaji Akinwale. Bye for now.